Hello and welcome to Moneycontrol. Well, we are sitting at the Jio BlackRock office in Mumbai. Jio BlackRock is the latest entrant into the mutual fund industry. BlackRock, as all of you know, is the world's largest asset manager. Jio, of course, in India has the largest reach. Today, we are sitting down with Sid Swaminathan, the MD and CEO of Jio BlackRock, to understand the strategy. I'm joined by Bodhisatva Ganguli, senior editor at Network 18 as well. Thank you so much, Sid, for joining us. So that's the first question. What is the big disruption that you're going to create in this market? How do you sort of take it from 1 to 100?
Look, firstly, thank you for having me. We're really happy to be here. And for us, I think starting from the beginning, we're very excited to be live and launched. We've launched our first set of funds, which were primarily cash funds, and we had a very, very successful launch. So we're very happy about that. We're currently in progress with our second set of funds, which are 5 index funds. And for us, it's really about being here in the market in India, addressing the entire spectrum of investors in India. So that's really the vision and mission, is that to be here to provide affordable, accessible investment solutions for more and more people in India. So that's how we're really approaching it. And how do we do that? Through differentiated products, through differentiated offerings from a distribution perspective, and really leveraging on the digital aspect of things. So that's the vision and mission. We're just getting started. And I think what you should expect to see from us over the course of time is more of those, what I tend to call, let's say, micro disruptions or micro innovations in terms of the types of products, the investment styles that we come up with, how we reach and access the customers, how we help grow the market, and then over the years, as these, let's say, micro disruptions add up, that should then lead to, let's say, a bigger change. And so it's a stepwise approach that we're taking, and that's what you should expect from us.
So Mahalakshmi referred to Jio's strength and reach, but Blackstone is also a storied name in the world of finance. To what extent BlackRock is a storied name of the world of finance? To what extent are you leveraging BlackRock's strengths?
Yeah, absolutely. So I think it's one of the key elements of this joint venture is that the two partners bring two very different and complementary kind of aspects to the table, right? As you mentioned correctly, like Jio has the presence and the reach and an understanding of the Indian consumer, and a very strong sort of base in the digital space, right? BlackRock is as you mentioned at the start, the world's largest investment manager. So that's what BlackRock is firstly bringing to the table, is the global investment expertise, having managed these kind of exposures around the world, but also Indian exposures for many, many years. So, for example, of the nearly $12 trillion of assets that BlackRock manages globally, over $100 billion are actually invested already in Indian assets, right? So there's a lot of experience there from just an investments perspective. On top of that, what we're also bringing to India is the technology platform of BlackRock, which is known as Aladdin, which is an end-to-end investments management platform that really helps us as an asset manager build portfolios that are innovative, scalable, and then deliver that to clients in a manner also that provides more transparency and more of an understanding into the risks that go into the portfolio. So I think that is a very unique feature, so the technology platform that we're bringing in. And I think combining the investment expertise with the technology platform and the scale allows us to also then deliver and manufacture products that are much more economical from a pricing perspective as well. So it's the total value proposition, as we see it, is a combination of all of these factors.
So why have the first launches been passive funds?
Well, the first launches were actually the cash funds, which do have an active component to them. And yes, you're right, we're currently launching 5 index funds, and we will be launching active funds going forward, right? So from my perspective, firstly, it's not about active or passive. We actually call it index. It's not about active or index, but it's about active and index. And we believe that we need to be providing innovative building blocks in terms of the exposures themselves, as well as the investment styles that will allow the people who are investing in markets to build portfolios that are very suited to their needs, depending on where they are in their lives, what their goals are. But the building blocks need to be there. So that's how we're approaching the market, to provide the right level of building blocks, and also making sure that those are innovative and differentiated. So that's the point that you made earlier, is like, what is BlackRock bringing to India in this joint venture is the experience of having done this in many years in many markets, and then looking at different investment styles to then say, okay, what is it that can work well in India that is already not available? So I think that's very important for us to as a lens to apply as we approach the market here in India.
And was the response to the first set of funds, were they up to expectations or more than what you expected?
We were very happy with the initial response, and I think both in terms of the participation from institutions. So 90 institutions. This is public news now, that participated in the first set of NFOs. We're very happy with that. Since that, we've also grown the participation from corporates in our funds. But also the retail. I think that's, again, India being a predominantly retail market, we're very happy with kind of the retail participation in our funds. We have funds that are in the NFO stages now, which are primarily targeted at retail audiences. So we are, at present, very happy with the progress that we're making.
Little more on the point you made on Aladdin. Tell us a little bit more about the technology platform, and which segment are you going to be catering to using Aladdin? Is it because just to look at the distribution landscape for mutual funds, right now it is predominantly pushed through the distributor network. RIAs in India are a very small community. I think only 200 registered investment advisors are there, but your stated strategy is that you want to take the direct route, in which case investor education advisory becomes a very important component, because most financial products are pull products, not like a push product, right? It's not a pull product, it is a push product. So a little bit on what technology, what platform, how does this aid financial inclusion or widening the reach?
Yeah, so I think it's actually a two-part question. So if you allow me to break it down, right? So if I address the Aladdin part on its own to begin with, right? That's an investments technology, right? So what, as I said, what does that help us do is to produce and manage funds that are A, innovative, B, much more risk aware, and do that at scale. Right, so the ability to manufacture funds at scale is enabled by Aladdin, right? And then India is a scale market, so you need to be able to do two things really well, which is to manufacture at scale and then distribute at scale, right? So that's where the second part of your question comes in, which is more related to the digital ecosystem that we have chosen to start with, and I think that makes a lot of sense in the sense that we are seeing already a lot of, let's say, interest and participation from the investors in India on the digital channels, right? So people are getting more and more comfortable doing their finances on their phones. And that is growing at a rate that is much faster than anywhere else in the world. So I'm very excited about that. And then with our partner, we also have a player that is in this space and has an understanding of the Indian consumer. So being able to even be present in those channels. So for example, our app is inside the Jio Finance app, which already has millions of customers. It's also available in the My Jio app. So the ability to just be present in those channels where there's a lot of traffic is excellent for us, right? We also have other partners, so that's not the only channel. You mentioned RIAs, so again, those are already close partners for us, but also the other digital platforms, that we have already partnered with for our launches so far. So I think the digital ecosystem, as I like to call it, is very, very strong in India and growing. So for us to come to market with a partner that is already strong in this space and then launch with a digital first strategy is, I think, the right strategy for us to launch with.
So the Jio platform itself, you are saying, is going to be the big driver of this. There is nothing new that is layered on top of it.
Yeah, I mean,
Or is
there's a lot of things that we're working on, right? I think the Jio platform is the starting point.
Is there an alternate way of thinking about distribution? Do you have an alternate strategy for distribution, or is it the Jio platform and the existing RIAs and distribution channel?
Look, we have to address the market where it is. I think this is still an untapped avenue, right? So I think the platform is very strong. You highlighted this already. I think education is going to play a big role. So I think that's an area that we are already spending a lot of time on, and I think we will continue to spend a lot of time on going forward, on how people can, what are the channels in which people can really get comfortable with an understanding of what is our offering, what is our value proposition, what is our right to win, and why should we invest with you. Right. So we need to get that message out through the digital ecosystem and any other channel that we can, and then get people comfortable to coming to the platform, which already has a lot of presence, to come and invest.
Okay.
Could you talk a bit about the scale of the distribution, which you're trying to build out here? Because that's important, right? Because you are facing very strong incumbents.
Yes. So I think the way I would put it is that we are in the platform that we're already present in. Is already significant, right? So as you said at the beginning, there's 460 million users already of the Jio telecom network. So that is a huge market already, and that is a well diversified market in terms of the spectrum of investors, the locations within India. So already there's a big reach in that ecosystem, supplemented by the other digital partners as well as the RIAs. I think we are addressing a big part of the market already at launch. So I think that's a very exciting space for us to be.
On the contrary, I would argue, Sid, I'm just recollecting something Coca-Cola executive said many, many years ago when he was asked about the Indian competitive landscape. He said, Pepsi is not my competition, it is Nariyal Pani, Nimbu Pani and water in that order. So the largest thing is actually even today, it's mutual fund investments is in fact overall equity investments just 6% of household savings, right? So there is huge runway.
Yes.
But how do you sort of really scale that up? My question still remains on, because financial products are nobody wants to go out and buy financial products, whether it is insurance or mutual funds. You need that mediator to go and push and say, hey, you need this. So how does that layer happen with the Jio platform? Because digital is what it is. Or
any other digital platform. Bank deposits are also is also a competitor for mutual funds.
Yeah. So I think you made a very key point there, right? Which is that there is huge runway. So the whole sort of goal for us here is to help grow the market. So there's two big things that I think we should focus on. One is that from a macro perspective, there's huge amount of tailwinds for India, right? So in terms of the growth potential for the economy, the demographic dividend that the country has, as well as keeping things like inflation under control. So all these are massive tailwinds. There's a few, let's say, hiccups now and then, but I think the long-term consensus is very, very positive.
Geopolitical ones right now.
Yes, there are many of these, right? But I think the long term is very, very strong, right? And then there is the participation, right? And as you said, we are still only scratching the surface. So if we look at investor participation in mutual funds. We're still in, let's say, the teens here relative to the GDP, whereas somewhere like the UK is probably more like 80%, somewhere like the US is probably like 150%. So lots of runway. I think the industry itself is doing a lot to help grow that, right? So I think everyone recognizes this, so we're all part of this industry. So the education around the benefits of mutual funds already are doing a lot of that work. We will be part of that. We will continue to help along with our peers in the industry to help build that understanding, knowledge, trust, and ultimately confidence of investing in the markets. And then the platform itself is a way and means to access that. I think it has to be, the surround sound around it has to be built up both within as well as outside the platform. And I think the industry is doing a fantastic job. Again, mutual fund assets here have grown phenomenally over the last few years, and that is because the industry has done so well. The industry bodies have been really focused on increasing education. So I think for us is to become a part of that, help grow. We will still like to be able to provide our own lens in terms of the messaging and the education. Again, like I said, with our funds, we don't want to look and feel exactly the same as everyone else. So what different messaging do we bring as BlackRock is something that we look at. But this is all just to help amplify the education that's already happening, which I think is very strong.
Okay. Back to the question on Aladdin. You said it's primarily for investing, right? You have only one active fund. So where does this come into the picture? Does it increase the efficiency of an index fund? How does this model really help in augmenting your index fund performance? And today, what is your value proposition to me if I have almost everybody has an index fund now, right? Like most fund houses will definitely have one index fund. They're not necessarily pushed because the fee is very low, so it doesn't help to push index funds. But except for the fact that Jio BlackRock can be visible to 460 million customers, is there any value proposition that you have for your index fund that can really make a difference?
Yeah, sure. So again, there was a two-part question there, so I'll try and answer it in two parts again. So to the first comment around there's only one active fund, it's just the beginning, right? So, and again, we are here with a very, very long-term view. We're going to be launching many, many funds, many different styles of investing, and the beauty of Aladdin is that it does manage, or it is used to manage funds that follow many, many different styles. So BlackRock alone is very large, manages nearly $12 trillion of assets, but Aladdin is also used by other asset managers around the world. So the total amounts are much, much bigger. So the system is very versatile, so it can manage, or it can be used to manage many types of portfolios. So that's one point. The second point around indexing specifically, yes, there is a value prop, which is why we are launching index funds. And it is that, tracking an index is actually hard work, right? And I think sometimes that's why we keep saying, it's more than just passive, because people tend to believe that, well, if you just buy the stocks in the proportion there is, it's just going to get the index return. Well, you're not, because there's transaction costs. There might be flows that are mismatched, so which could create some tracking error in the portfolio. So I think the technology, which is Aladdin that we have, has features in it such as there's a risk model, so that has a full understanding of the securities that are in the portfolio. The fund managers are able to do stress tests, scenario analysis on all portfolios, not just active, on index, and these all can be done at the click of a button, right? There's an integration of that system with the trading function, which also sits within Aladdin, which means that when big events like rebalancing happens, which is the biggest event for an index fund, you can be more strategic around, okay, is there a market impact, for example, from trading in a certain way? Can we have a differentiated trading strategy to minimize market impact? Because ultimately, what is an index fund manager trying to do? The index fund manager is trying to deliver to the customer the returns of the index, minimizing transaction costs and minimizing market impact, because all of those take away from the. So we really, really focus on what we call the tracking difference, so how closely does the returns actually match the returns of the index. And with the technology that we have, we believe, and we believe because we've done it at BlackRock for many, many years on trillions of dollars of assets, that these features can help minimize the tracking difference, which ultimately ends up in providing better returns to customers. And then to my first point on being able to do that at scale across many, many funds in a cost-effective manner for us means that we're able to pass some of those cost savings to the end investor as well. So those are I would say, the key value propositions of the technology.
Okay, is there a number that you can give us in terms of, what is the tracking error of an average fund in India today versus, by the way, for our viewers, Sid was managing more than $1.2 trillion in assets and all of it under index strategies, more than 500 portfolios in his last assignment. But Sid, coming back to the question, the BlackRock tracking error versus how does it compare to the Indian industry tracking error today?
So again, there isn't one number, sadly, right?
Okay.
Because the tracking error is a function of the actual exposure. So, if you are tracking, let's say, a very
there isn't one number is when one is trying to give a complicated answer.
Yes, I know. I'm trying to simplify.
Or one is trying to.
I'm trying to simplify this, but the reality.
BlackRock versus the median Indian industry.
Yes, and there's two. And
or we could even do best versus best.
And I don't want to complicate it even further, because there's also a difference between tracking error and tracking difference, right? So tracking error, what we see is an ex ante number, which means that what do I expect my fund, how do I expect my fund to track? Whereas tracking difference is how has my fund actually tracked.
Correct,
right?
Ex-post.
So ex-post, right? So now we haven't launched our funds yet, but we believe that the ex-post numbers will be a lot tighter and in line with the best in the industry. That's our goal, right? So we want to be from both tracking error, tracking difference, and we call that quality is the word we use from an index quality perspective. We want to be in the top, right? And we want to be able to deliver that quality, so the top level quality from a index return perspective at a very affordable price. So quality, price gives you value. So we want to be the most valuable index provider.
To attempt to simplify what you're saying, you want to be number one in India when it comes to the least tracking error. Is that what you're saying?
I think, again, it's we don't like to rank ourselves as number one, number two, number three. I think it is much more material to be in the top from a quality perspective. Like, it doesn't have to be first, it doesn't have to be second, because we're always looking at it from a customer perspective, right? Because there is going to be a point at which that you are delivering the right level of returns that you're expecting at the right price. And if you do those both well, the customer is going to really get value out of it. And that's what we're here to do. It's not to be number one on one metric and number three on another metric. I think those can get a bit, what's the right word I'm looking for? Like, it's not delivering what is important for the customer if you just look at one thing.
Okay, let's use a generality like first in class or top class or something like that.
Best in class is one I'm happy to use. We want to be best in class. I mean, that's what we always strive to achieve.
Tell me, in terms of market share, in terms of the AUM sweepstakes, where do you see yourself 5 years down the line?
I keep getting asked this, and I keep disappointing people because it is not something that we are setting as a target right now, and I'll tell you why. Right? I think we are just getting started. We have only launched a handful of funds. We have a plan to launch a series of funds in the next sort of few months. We are coming to market as a new asset manager with a differentiated proposition. Again, it was very important for us to be differentiated in what we're offering. And we are also looking at a direct first digital approach right now. And we need to really learn a lot more about the market, how the adaptation to that strategy works, to then really think about, okay, what is the right target 5 years down the line, right? I think the big picture for us is not necessarily what our AUM is like, where is the market from here? And I can easily see the industry being 2 to 3x where it is from now in 5 years, right? And how much of that do we end up getting is kind of what we need to be looking at. But I think there is still, we are still in the launch learning phase right now. And, you know, in few months' time, I think we'll be in a much better place to actually say, okay, this is what is realistic, this is what is achievable, this is what is ambitious, because we need to have all of those targets to then really comment on that and put a number.
So top 5, top 10.
More
top
than
7.
that, I would ask Sid, going by Jio's history, this 2-3x can be 10x, and the causal factor or the causal agent for that itself could be Jio BlackRock. And could that be the case? Is there some thinking around that?
Very possible, right? Again, the 2-3x is us looking at the market and looking at where it is going. But yes, we would love to be the let's say the agent that gives it a further boost. That's great. We will.
Do you see yourself as shifting the terrain completely? Can it be? Is there any large pocket that you see can be a huge shift and, you know, make this industry explode even from here on?
I think if we are able to build the, let's say, the trust and the comfort of investors, you know, quickly, I think that can really accelerate the participation, because the means of the access is very simple. It's, hey, it's on your phone.
Right.
So I think there is a huge potential to do that. Like I said, the trends are telling us that it is happening already. We need to be able to build that very quickly and then accelerate on those trends. So I think that could be the, let's say, like I said, the ultimate big disruptor after the series of micro disruptions, is that, you know, a vast part of the market is very comfortable on just being digital and accessing funds on their phones.
So if I can, just perhaps ask the question in a different way. The government, one of the government's goals is financialization of savings. It's a national goal. And you have an option of, for example, of SIPs of as little as 500 rupees. What kind of potential do you see in these kind of segments in terms of your products? I mean, do you see a lot of growth coming from those kind of areas?
Yeah, and I think, SIPs have been phenomenal.
Because your cost of distribution would be, would be low or lower, presumably, because of your, because you're reaching them through the digital route.
Exactly, right? And I think that is a amazing feature. Firstly, the SIP to have, because I think it instills kind of the good behaviors of averaging into exposures, which, you know, you always read about in textbooks. The SIP actually makes it happen, which is great. And the growth of that kind of segment is also very, very encouraging, because it's showing us that more and more people are seeing the benefits of it and continuing to kind of invest. And yes, as I said at the start, our mission and vision is to make investing easier, more accessible, more affordable, democratize it for more and more people. So being able to offer, you know, SIPs and minimum investments as low as 500, which is where we are now, is, I believe, a good way to get more people into the market.
So you know, India perhaps is justifiably proud of the way our mutual fund industry has grown in the last 5 years. You have an enormous international perspective also. You've seen the mutual fund industry. This is your first professional assignment in India. So can you give us some international perspective on where the growth in AUMs and India compare in an international perspective? Particularly perhaps thinking of large emerging markets, where, you know, which could be in a similar stage compared to India. Is there some perspective that you can bring on that?
Yeah, sure. And I think I'm going to sound very biased here, obviously, given that I'm now in India. I think the potential that India is showing in this space is above and beyond a lot of the emerging markets. There's other countries as well that are on the same trajectory, but I think the potential here is huge. Just as I said at the start, the macro trends combined with what we are seeing in terms of the digital adoption, where the starting point is. The combination of all these three is very unique in India, which is what makes it very exciting, which is what made it very exciting for me to get the opportunity to come here and help build this company, help launch the company. So I think relative to other parts of the world, this is a very, very exciting space for us.
One question on index investing itself, because world over there is this narrative that index funds have lots of issues in terms of concentration of indices, the fact that there is herding that happens, which becomes a self fulfilling kind of thing. More and more money keeps flowing into funds because they perform. There is also a largeness bias in index because everything is market cap weighted. So looking at all of those things, and globally some of the funds champions of index investing like Vanguard have also taken to active funds. Where do you stand on this active versus passive debate? Which will be a bigger thrust area? I know that you said you're going to straddle both, but in the initial stages, will you continue to focus on index investing, or will it be both? What's your strategy?
Yeah, I also said, I think at the start, for me, it's not active versus passive. I think it's active and passive, and there's a space for both in an individual's asset allocation. But coming to the industry specifically, right? I think indexing in India specifically still has a lot of room to grow. I think we have come along very quickly over the last few years, but as a percentage of the overall, let's say, industry, we're still in the high teens, maybe approaching 20%. Europe's between 33-35%. The US is above 50%, and it has been for a while. Right, so, and those trends globally are still continuing despite some of the kind of challenges that you've called out. So I think the runway for indexing in India is very, very long and strong. But it's not just about that. So I think it's going to be that, as well as having the right selection of active funds available for portfolio investors as well, is going to be important. And that's why our strategy is to be available for all investor types in India, whether it's corporates, whether it's retail, as well as offering all types of investment offerings, whether it's active, whether it's index. And that's how we're approaching the market.
Okay, one last question from my side, which is, do you see any regulatory leverage that is available now which can sort of ensure that this industry can really grow very fast from here? Is there anything that is available, say, in Europe or US in terms of regulatory lenience, which can be brought about to ensure the industry grows faster?
Look, I think from a regulatory...
For example, third-party checks is not allowed. On money market mutual funds, you can't issue third-party checks, or there is no check writing available on it. Is that a big market? If that is brought into mutual funds in India, can that sort of create a huge market for mutual funds? Are there any other things like that?
Yeah, look, I think firstly, as I said, we're just getting started. So in terms of launching our funds, interactions with regulators, we're at an early stage in our journey in India. What I can say is, regulatory environments are different in every country. Right. So there's no one thing that works really well somewhere that will just automatically you can lift and shift and make it work everywhere around the world. So I've learned that from my global experience. So I think it will be, for me specifically and for Jio BlackRock, really, as we learn and understand more about the market, which we are starting to do very, very quickly now that we're in the market, is then to say, work with the regulators on saying, okay, what are we seeing here that could be improved, enhanced based on some of the experience that we've had globally. And that's the vision for us. But we're not coming here to market to say, okay, here's the 3-5 things that need to be changed right now for it to grow. I think we still have to learn a lot more. And it's going to be about adapting, because we do need to localize. Like ultimately, these are funds in India for Indian people. So we need to have that lens that we take, and that is consistent with how we've approached as BlackRock, or how BlackRock has approached markets globally as well.
One last question from my end. Are you looking at areas like, let's say, NPS fund management, any of those kind of areas?
So right now we're looking at everything. Is the answer? Maybe a bit disappointing and boring, but the reality is, to be able to do what we want to do, which is, I said, is provide accessible, affordable investment solutions to more and more people in India, we need to have the full range of offerings over time, right? So we need to look at what is right when. So it's more of a question of when rather than if, but I think all segments of the market, we are looking at it with a lens of what value proposition can we bring to that segment, right? And it is not the case of launching a Me Too product just to be there. So really, how do we leverage the BlackRock expertise, the Jio expertise here locally to provide a value proposition for a segment is how we're approaching things.
Right. And large Indian domestic mutual funds have become, for example, anchor investors are in public issues. They're also increasingly providing credit to finance transactions. Is that too early for Jio BlackRock, or will you get into that at some stage? At
this stage, it's too early. Like the funds that we are launching right now, it's cash index funds right now, few active funds coming up. So this stage, in the first phase, is early. But like I said, like these are things that we will be looking at and evaluating as we grow.
Sure. Thank you. Thank you very much. Thank you.
Thank you so much, Sid.
Thank you so much.
Such a pleasure talking to you. Thank you.
Thank you for having me. Really enjoyed it.